What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
Oh, Logan, you're going to ninja launch on us. We are recording. We are meeting, as you can tell, anybody who's watching this, there's only 3 of us this week. I'm in Nashville, Tennessee. I'm at the Lightning Summit being hosted by the Bitcoin Park here in Nashville, an incredible co-working space and event center for people building in Bitcoin, wanting to learn more about Bitcoin. I wanted to pull one of the attendees to this summit in to be our guest this week, and I got rugged. I'm not gonna name who it was. I don't want to put them on the spot publicly, but we got rugged. So it's just the 3 of us this week. It's gonna be an intimate episode, a tight rip. Gentlemen, how are we doing? We're doing this new format, and it's just the 3 of us this week. Are you okay?
New format, different time zones. I'm in mountain time right now. Jesse on the West Coast, and the rugging will. Maybe we announce who rugged when we have him on the pod, because it was a great idea and good concepts that we do want to talk about. So,
and we will touch on them. But before touching on those, big news of the day. Again, I do love these summits and like these Bitcoin events that are like very busy and high signal, and you're like forced to engage and actually pay attention. I haven't been on Twitter all week. I wasn't on Twitter this morning, and I was only made aware of this video clip like 20 minutes ago. So Logan, let's pull it up. We got Larry Fink on CNBC saying some stuff.
Joe Fitz? Well, I can't talk about Bitcoin because we have a filing with the SEC, so I'm prohibited. I can talk about crypto in general, and I can talk about what we have done. You know, we believe we have a responsibility to democratize investing. And we've done a great job, and the role of ETFs in the world is transforming investing. And I think we're only at the beginning of that. I mean, we believe the fixed income market is going to become multiple $1 trillion in ETFs. Equities will continue. More and more of the market will be delivered through an ETF platform. If you think about what was done 20 years ago now with the advent of a gold ETF, that really democratized gold investing. It brought down the cost of transaction for gold. I mean, the cost of transacting physical gold is absurd. And now with crypto, the idea of democratizing that role, the cost right now to transact is quite expensive. We're talking points, not decimal points. And so that's a big point. 2, over the last 5 years, more and more global investors are asking us about the role of crypto. And as I said, I do believe a lot of crypto is going to be, it's an international asset. It has a differentiating value versus other asset classes, but more importantly, because it's so international, it's going to transcend any one currency and currency valuation. If you just look at the value of our dollar, how it depreciated the last two months, and how much it appreciated over the last 5 years, I mean, an international crypto product can really transcend that. And that's why we believe there's great opportunities, and that's why we're seeing more and more interest. And that interest is broad-based worldwide.
But before we jump in, can you guys help me understand what he meant by appreciate and depreciate? He said, like, in the past 2 months, it's appreciated and depreciated in 5 years.
He was talking about the dollar. I think he fumbled through that. He was fumbling.
What do we think he meant? Because that's just very confusing as the whole story.
Yeah, Dixie, the dollar index is down over the last couple months. It had a strong year or two before that. but it's down now. And that's just a measure of how the dollar is performing versus other fiat currencies, which is to say that for a couple of years there, other fiat currencies were printing more than the dollar, so they were debasing faster than the dollar, so the dollar was doing relatively better. And now that's kind of flipped. Like the Swiss franc right now is kicking butt versus the dollar, and so that's a trend that's been playing out. And I think he was just kind of extrapolating that.
Yeah, but probably it felt like watching that. It was the third time I watched it in the last 10 minutes, and it seems like he was like fed some talking points and fumbled through it. Like I don't think he really believed what he was saying, but
it did feel like he hadn't really practiced them at least. And yeah, he had a week ago, he came out and said that Bitcoin is a product that BlackRock wants to get into, because then he made this strange leap of the foundational value of BlackRock is about hope, which of course is hope being this word that Michael Saylor has linked to Bitcoin and made part of the Bitcoin ethos, that Bitcoin is about hope. So he, in a kind of fumbling way, then was trying to connect BlackRock with the Bitcoin ethos as if a Bitcoiner had been coaching him, the same way that I think like RFK and other politicians have been coached on Bitcoin recently.
I think the whole thing's insane. I was listening to the one notice he said they're democratizing crypto vis-a-vis Bitcoin. It's like this week, it's such a prescient, it just within 24 hours at the same time Mutiny Wallet announces you can, basically spin up a Lightning node and a node, accept a transaction in a browser. They're democratizing crypto in the same way that they democratized gold. He's touting it as a good thing that they made paper gold, and that, good luck getting your gold if you need it at the time you need it. Imagine like good luck getting your Bitcoin at the time you need it. Like it's completely nuts.
Yeah, and I think again he was leaning into the transaction cost when I really. If I think about grokking it correctly, he's comparing the cost of getting exposure to Bitcoin via an ETF to buying Bitcoin directly on an exchange, and the different fee structures that exist between those two. And that's funny. He still believes that like transacting in Bitcoin, just buying it and like holding it in an ETF, or just holding it on an exchange, and not grokking like the actual cost of sending an actual Bitcoin transaction at the protocol layer. And viewing it as this bearer instrument that people will actually use and spend and move around. And he's really stuck in this myopic view of, Bitcoin's just going to go sit in our fund at Coinbase. This is what people are going to want.
That's where I got confused with Jesse, what he mentioned on the 2-year, because the way I interpreted it was that Bitcoin against the dollar, has been against the price relative to the dollar the past 2 years, but over the past 5 years. And it seems like he had like 4 different or 5 different talking points he was trying to like string together, and they all just got lost within him just like,
Yeah. The time frame comparison thing was confusing. I'm not really sure what he was trying to say there. It does feel like, for better and worse here, Larry Fink has wrapped his head around maybe Bitcoin is digital gold, and he doesn't understand Bitcoin yet, but he sees, gold is a product that BlackRock has quote unquote democratized with an ETF that's been very successful. Maybe we can make money doing that for Bitcoin. And I think that might be as far as he's gotten, but that might be enough for him to suddenly be an advocate for like legitimizing in the mainstream finance view, Bitcoin as a product, as an investment asset. And that's a good tailwind, though Michael's right that, they want to ingest as much Bitcoin as they can and have it sitting in a single fund without actually enabling people to use the underlying asset or even take self-custody down the road. Because we know that the Bitcoin ETF that BlackRock has proposed doesn't allow an average Joe to take an in-kind redemption out of it. You're not allowed to do that unless you're a registered broker-dealer and you're doing whole Bitcoin rather than fractional. and that's not going to happen all that often for an average individual. But what does give me hope here is that this seems to be a trend, and this is where I'm going to get on a strange soapbox that I wasn't expecting to get on, a week ago. But Larry Fink's excitement about Bitcoin right now, there's just under the surface, there's like an affable grandpa's excitement, and that might be why he's a killer, because you think that he's a friendly grandpa, but really he's stone cold ruthless. But at any rate, there is something about his language right now with Bitcoin of he's realizing the things that we've all realized in our own journeys into Bitcoin, that first of all, Bitcoin is not monopoly money. It has real substance to it. It has real value. And then once you have that fundamental switch, you start to appreciate just how much value it brings to the world. And at the end of the day, Bitcoin is American values. It's about personal freedoms, property rights, self-determination, not allowing anybody to steal your wealth over time, being able to save and build a brighter future for yourself and your family through saving. That's fundamentally American. Now, Wall Street titans, despite all of their sins, they love America. If you're a self-made billionaire who has made a long career in Wall Street, and you're hanging out in the Hamptons in the summer in your lavish spread in the backyard watching your kids play in the pool encircled by grass, which is the Hamptons way, you're gonna love the country that helped you live this life. Even if you were an absolute wolf in getting there, you love the foundation of America. You love American values. And now here comes this thing that you are starting to recognize is American values, more so than the US dollar. The US dollar is actually not American values. And so I think we've seen this with Paul Tudor Jones and Bill Miller and Stan Druckenmiller, where when they dig a little under the surface, they realize that Bitcoin has merit and is actually something that aligns with their value system. And then they become advocates for it, as we've seen those three men do. And now every other Wall Street titan is forced to reckon with, okay, I respect those three guys. And in fact, all of my friends who look into Bitcoin start to become advocates for it. So maybe there's something here. And then they do their research and come away discovering that Bitcoin is American values. And I feel like Larry Fink is at the beginning of that orange pill epiphany. And for many reasons, he will probably never get there fully. But I think he just went from vocally anti-Bitcoin to, you know what, Bitcoin is good for the world. And that's a huge step.
So a few things. I agree, because what I'm going to say after is going to be a very controversial. I agree that the game theory obviously aligns for everybody to adopt and hold Bitcoin, and Bitcoin is the most American thing. At the same time, are you telling me BlackRock, the creator of the most anti-American, basically ESG, is now getting Bitcoin from American ethos? Is that what you're saying, Jesse?
I'm going to say that I'm going to bend over backwards here and try to make this argument that the ESG thing was them falling for, that political narrative and wanting to do something good for the world and ham-fisting it. That's my argument.
Yeah, no, I mean, so because I'm curious, so there's that. There's also, I was taking notes on this last time, again, the third time, like Marty, in the past 20 minutes hearing it. And he said a lot of key things. I think there were tales on BlackRock about transcending the US, absorbing capital, global investors. I think what they ultimately got is they recognize, one, the asset is coming. It has there's certain market structure of we know inflation, what happens to gold and hard assets. Bitcoin will do its thing. There's an understanding what will happen. There's a halving coming. ETF has to come. They're having the SEC lawsuit with GBTC. They get the nod, get the ETF, but the idea is that there's so much liquidity to be absorbed by whatever 16, 17 million BTC that's out there, that there's two parts in them, pumping the bags that they will accumulate, while also he referenced like this ETF, this model that has started the past 15 years of centralization of assets. He didn't say tokenization, but there's also this Wall Street thing happening right now where the next wave, or we're starting to see it. And again, we did this in like 17, 18 and like STOs at the time, whatever they're going to refer to, tokenizing bonds and ETFs in this world. But there's just this play on, at least in my view, of centralizing assets, and at a click of a button being able to say, oh, these aren't yours anymore. Because that's effectively what he was communicating about the gold centralization of, we made it cheap and costly to be able to, or less costly to hold gold, which sounds really good. It's like the great, turkey meme where it's good for 364 days. And on the 365th day, when you actually, you need the gold in this case, you're dead. It can't come to you in the same way Bitcoin. So, the whole thing doesn't smell good at all. I think these guys are not working in Bitcoin's best interest. And I don't think that's a problem. It's just more of we should recognize it and plan accordingly, because anything otherwise, specifically with this situation, I think would be everybody. It's a disservice.
Agreed. No, not fully agree. I'm going to take it a different direction, which is, I don't think he understands Bitcoin at all yet. But I do think the last line of that clip, particularly around Bitcoin and quote unquote crypto being able to transcend any individual sovereign nation currency, is a nod towards like the BlackRocks of the world, Larry Finks of the world understand that the geopolitical and economic landscape of the world is extremely fragile right now. And he's probably sent a bunch of analysts like, all right, what's going to be the next move or one of the next moves? And they've come back and they've said, all right, Bitcoin and crypto is probably that. And he's sort of rushing to market with this ETF and with this narrative that, again, obviously hasn't practiced enough. He was fumbling through that whole interview and is like, all right, just like, I'm being told this is the right thing to do. Like, we're all in on Bitcoin. It transcends. Like, he was given a few lines to try to remember. He did it pretty poorly and then ran with it. But to Michael's point, like it is a bit alarming the way they're framing it, disingenuinely. Like, again, using sort of equating the transaction cost of exposure to an ETF versus your run-in-the-mill Bitcoin exchange like River or Cash App, whatever it may be, and equating that with actual like Bitcoin transactions that people, individuals and businesses can make at the protocol layer or layers above it via the Lightning Network. That's disingenuous, number one. Very alarming, number two. If BlackRock and others that come after them are able to successfully lull the public into believing that getting exposure to Bitcoin via these products is going to enable them to leverage the properties of Bitcoin, which it's not. With BlackRock specifically, we know that unless you're a blessed participant, blessed broker dealer, you're not going to be able to take that Bitcoin in kind and do the things with that Bitcoin that you want. And another thing here too is if BlackRock gets this approved, which I think we all agree is probably very likely, then others follow suit. And it seems like, I believe there's 6 filings out there right now, and 4 of the 6 are using Coinbase as their custodian. I believe the 2 others using State Street, and I believe State Street, maybe Fidelity. But if we get to a situation where the ETF gets approved, it gets popularity because the Larry Finks of the world are successful in conning the public into believing this is the best way to get exposure to Bitcoin. Like, we could have a situation, like, again, the fact that he was comparing this to gold and what the ETF market did for gold. Like, if the Bitcoin ETF does does what, like, it's not going to be like, well, like all the supply is going to concentrate in Coinbase, and then Coinbase just becomes this massive honeypot and this target for governments to be able to show up to and be like, hey, we see you have 3 million Bitcoin there. We're gonna need you to give that to us, or to not move it off your exchange, and that could really hinder a large part of the market.
Yeah, I think that's been the big unlock, is what you said on the global. It's the reflexivity that they recognize that if you think about gold, what is the ultimate, if in a world where Bitcoin does everything we think, what's gold at a troy ounce? Like $10,000, that's 5x from here. The reflexivity and understanding a single Bitcoin from 30K could be 300K, 3 million based on supply demand, that they can aggregate that. I think it ends up just being a simple equation of if we, greenlight the ETF, we can accumulate trillions in assets, and that's fees. And to your point, what I think the second is a call option that we potentially can control this. And A is great, and B is just extra gravy on it. And I think that's as simple as what's happening here.
Yeah. I hear what you guys are saying. I think I'm probably being a fool here, because I think that there's an earnestness that they think they have, because when people find out about Bitcoin, what does everybody do? Everybody shows up and says, I'm here to fix Bitcoin, right? And this is their version of that, right? Bitcoin's an asset that makes sense in a world where the US dollar hegemony is fading. The rise of the BRICS is a threat to the Western dominance of the international markets. And that's what Ray Dalio got wrong about the changing world order. He implies that, since there's a 600-year track record of the global reserve currency rising and falling every 100 years, and it being a new nation every time the ascendant superpower takes over as the global reserve currency, because that's the currency that you can trust your value in. That pattern led him to sort of suggest that China is going to be the next global reserve currency. But what he missed is the rise of the internet. The internet creates this super sovereign currency that transcends international borders, and it's Bitcoin. And that super sovereign currency is greater than trusting any individual nation. And so that's what I think Larry Fink and his team at BlackRock are better suited to understand right now, is in the current global landscape, there is a case for neutral reserve currencies, hard assets, and that means gold historically, but now Bitcoin in the digital age. And holy shit, this thing could be big because of that. And then they come in with, okay, great, so Bitcoin has value, let's do what we do and try to quote unquote democratize it by spinning up an ETF. Yes, I just discovered Bitcoin and I'm here to fix it. And that's Larry Fink right now. And so, I think it's this combination of like earnest intent and the classic fallacy that everybody comes to Bitcoin with. And Bitcoin humbles you. And when you have yet to come to Bitcoin on its terms, you are setting yourself up for hard learnings, because you will eventually be humbled. And then you will figure out, oh, this thing just wants to be held in cold storage on chain and outside of the TradFi universe. That's coming for Wall Street 10 years from now. But right now, they think Bitcoin is great and they're here to fix it.
So the two counters to that is, again, I won't say what I think they're doing. I'm just looking at their actions. We've all known, I think anybody paying attention, like the government can't create a CBDC. They cannot create a digital unit that can be transferred, and it would be a public-private partnership. BlackRock owns basically Circle. BlackRock has already signaled the horse they're riding on international trade and settlements and the things they're growing. So I think like from that perspective, and the second part is like, I go back to this, BlockFi is the closest because we're still so early, but BlockFi come in to fix Bitcoin or do lending in the Bitcoin world. Like to your point, they got wrecked. It's the same thing, like BlackRock coming in and attempting to do what they're doing, but at an or 100x to 1,000x broader exposure, being the largest asset manager. Like, we know that when people come into Bitcoin, whoever they come in through is going to be how their journey. It might dictate their whole journey, i.e., it goes to zero, or it may push them back on the curve of learning based on the education and information. That's why we focus so much on it here. You guys kind of carry that torch longer than I have, in the sense of like the content Marty you put out, content Jesse you put out, and people that have come in. I used to say this at Unchained when they found Unchained, like, and it was a very bold statement. It said, you found like the signal, will help you walk through it, will help you how to custody, will help you how to lend against it. If you decide to stay, it's up to you, but it's up to your, it's up to your kind of like risk you want to take, because we know, what happened with Genesis, BlockFi, all that. And so it's a very similar thing with BlackRock, except for it's, again, orders of magnitude larger. When you think about asset managers, capital allocation, they're going to go to BlackRock and they're going to say, oh, you understand this, you bless this, tell me what to do, govern me harder, daddy. Where do I put the Bitcoins? Where do I send them to? How much should I let you hold? So again, it's just, even if they did, in good faith, think that this was American values and help it, like, if they don't fully understand it and they're going to cause so much pain and disruption for a bunch of people that, it's just a hard thing to like rationalize how it's a positive other than,
I think you're right that the good intentions here don't amount to much in terms of the experience that BlackRock may be creating for its investors down the road here, or other Wall Street firms. I mean, last week I ranted about how Wall Street is going to get burned. Some Wall Street firms are going to go under in the next 10 years because they engage with Bitcoin in the wrong way, and they rehypothecate, and they have a hole in their balance sheet when the tide goes out, and boom, it's bigger than the enterprise value of the firm, and poof, some venerable Wall Street institution of 150 years is gone just because they underestimated Bitcoin. That's going to happen. It could happen to BlackRock. And so the good intentions here don't create good outcomes necessarily and in fact, what they do create is a giant new surface area for attack for 6102, for a honeypot of assets that government forces could leverage, a wedge that they could exploit in the future. But I guess I'm excited about the narrative shift that Bitcoin is good. And I think it is very concerning, the kind of the product that people will be herded into, and the weaknesses of that product down the road. But I'll take the win. But I do think it's on Bitcoiners, it's on us to raise the alarm about which vehicle you're trusting. I mean, that was the metaphor I was going with when I wrote my recent piece about digging into the BlackRock S1, the filing, laying out all the specifics about BlackRock's proposed ETF. And my takeaway was that it is a bicycle with one good normal wheel and one square wheel. And the square wheel is BlackRock governance and custody, and how they're proposing to approach that using the old world way for Bitcoin. And that's a centralizing force and a bit of a scary force in several ways. So I think that, it's a bad vehicle, but I'll take the win in terms of, Larry Fink saying that Bitcoin is good for the world.
Yeah, I'll take that win too. Take the wins where we can get them. They want to pump our bags. Definitely do it. They're certainly trying to pump their own bags. And
Michael won't take this.
The onus is on us to wait, Michael. I'm going to go into something you're going to like. Don't worry. The onus is on us to get people into the good products, and then this is why on-ramp exists. And again, there's either a mental blocker, blinder, or just pure ignorance to the way Bitcoin works, particularly around the native properties, particularly multi-sig, that enables very unique custody models, which on-ramp has built with the multi-institution, multi-sig, where the Bitcoin sits within the trust. Like, I think as educators and as people, maybe even advising TradFi companies getting into Bitcoin and providing Bitcoin products, the way we should be pitching this, again, like Bitcoin's distributed nature works at many different ways. You have the distribution of full nodes to make sure that's really hard to change the protocol and shut it down. You have the distribution of hash rate geographically, and the ownership breakdown to make sure that mining is sufficiently distributed so that the network is secure and that blocks are being produced. You have the distribution of nodes and channel management at the Lightning layer. And then again, private keys is probably the one that is least talked about, but arguably obviously one of the most important, just equally as important as the rest of those factors, if you want Bitcoin to be as robust and resilient as possible. And if it's as robust and resilient as possible, it will be extremely valuable. The more robust and resilient it is, the harder it is to shut down, the more valuable it is. The more people are like, oh, this is ironclad. I need Bitcoin. It is our money. And so I think an area that's been a lack of focus throughout Bitcoin's history has been the private key distribution, like distributing keys and creating these quorums of multi-institutions to make it extremely hard for governments or large investment firms like BlackRock to essentially take a large portion of the Bitcoin supply and either create a honeypot or control it unilaterally on behalf of millions of people. And so that's, again, Jesse, to your point about educating people about these different structures, I think when doing that, to get people to understand it, it's like, all right, you use this distributed multi-institution, multi-sig model because it makes the distribution of private keys more robust, which makes it harder to unilaterally control Bitcoin on behalf of governments or large institutions, which increases the value prop. It makes it more valuable as a result. So with that pitch to people to help them understand this, I think you just add like the sprinkle on top and like, yeah, this is going to make Bitcoin more valuable because it's much harder to unilaterally control large swaths of Bitcoin.
Yeah, I mean, so there's a couple of things. When Jesse was like, all this I empathize and get where the different takes are, like our stances on it, because it makes sense. I think there's partially, whether we admit it or not, like BlackRock coming in, we like to go because it's going to pump our bags. Like this thing's going to get insane quickly. I think we all agree there. But when Jesse was breaking down like how this is going to play out and BlackRock, all I could think of was the greatest trick the devil ever pulled was convincing everyone he didn't exist. And right when I thought that, Jesse mentioned the people getting herded into this product. And I think that's exactly right. Like they get herded into the product, as Marty mentioned, keys needing to be distributed, but keys needing to be distributed is not intuitive, and it's not, it doesn't make sense to majority of people. Like majority of people have not come into the space. It's the same thing where yield doesn't make sense, or the fact that you shouldn't generate yield on Bitcoin didn't make sense, and a bunch of people lost all their funds. And so I think of like, Bitcoin just flips kind of how the products in the financial environment will be built, similar to, again, BlockFi's loans with rehypothecating. You take a more kind of pragmatic, conservative approach. You get your Bitcoin, you can, get US dollars or, lend against it if you need it, but you get your Bitcoin back, high or low loaded LTV. Similar with keys, looking at it saying, I want a conservative approach. I want multiple people to hold these keys and have a governance in place. That sounds great. The reality is that's not how traditional finance works. It's everything. It goes against everything that they believe in when it comes to centralization of assets. How do you, financialize them, which comes with risk. Generally, you can print your way out of risk. You can't print more Bitcoin. And so this whole thought of, yes, I think we all agree here that we know the model for the future, but at the same time, I just can't like champion or be excited about, this is how we're just going to have another 5 years of just blowups and craziness and doing it the wrong way and all of it. Just like, I think it is what it is and money will flow in reality is we can't change any of it, but we should be aware, at least admit this probably is how it plays out versus, oh, this is all like in good faith. Because it's just in the history of everything BlackRock's done has not shown any of that to be the case. And if this disintermediates all other assets, then this wouldn't even, and they understand anything around what's happening, then they wouldn't be acting in good faith moving forward.
Yeah. BlackRock, Larry Fink may love American values and see them in Bitcoin, but the other things that BlackRock clearly loves is they love control and they love influence. And so you can like American values, and that's good, and that makes you a Bitcoin advocate. But
so how do we know how do we know they like American values? Like Marty knows way better than I do. But Marty, like just from an offshoring and the amount of energy production that's been halted, what that means from like just pure, what that means from low income individuals in America to be able to access and flourish. Like, how do we know? Like, explain the logic behind they love American values.
Yeah, it's speculative, and it's the thought exercise of these guys who are Wall Street billionaires. They're really smart, very well read dudes. All guys
know how to play the political game. I think that's an important factor here. That is like when it comes to ESG and all that stuff. I think a lot of that's driven politically.
They're hyper competitive. And as part of that, they're hyper social. So they're in the business of finding an edge. And that means talking to each other constantly. And they're constantly evaluating like, okay, who do I respect? Who's on to something? Whose mind do I admire? And so that's the game they're in. That's the game they're playing. And it's all a wealth accumulation game for them. But that game is only possible with American rule of law. And the American culture of like entrepreneurial endeavor to try to accumulate wealth and build wealth and create a brighter future for your family. Of course, they have to engage in this. By engaging in a political game, they're doing things that are successful, that are not admirable. But I think that all of these guys think that they're good guys. And that they are, the pillars of their family. And that puts them at like an American patriarch identity at their core. And America's values that have enabled capitalism resonate with them. Like they think of themselves as good guys. And what do they like? What are their values? What do they embody? What do they champion? I think it's not too much of a leap to think that the common values that they have as a group, Wall Street Titans, is that they love capitalism, they love American rule of law, and they love that culture of building a brighter future for your family. And ultimately, that's America. So that's my thought exercise.
I do, yeah. So I do agree, and I think this is a good. I'm glad we're having this conversation because as we're working through this, I'm like, I can almost see, and I'm curious your guys' thoughts, like where this ends up. Like everything's good for Bitcoin, right? So the price pumps, people come in, they have to hold it. So the people that weren't even wanting to hold it at 30K want to hold it at 150K, 300K. They can hold it because of the liquidity profile. But then ultimately, we see this fork from BlackRock that says, "Oh, you can't take your Bitcoin. You can take the green Bitcoin." And so everybody that got herded in basically through the BlackRock solution or Orbit, right? Because it's going to go to Coinbase and anything else associated. It's like, hey, this thing's crazy. Like you could take it, but it's just not the actual Bitcoin.
Yeah, I think that narrative shift of we just went from BlackRock saying Bitcoin is bad because ESG to now Bitcoin is good because ESG. And that can never be undone. Like that narrative shift will remain. But what can still happen, what I think will still happen, is people will get burned. People who are being herded into Wall Street products will get burned. They will learn a hard lesson. And so all this incoming demand is good for the price, but you better be sure that you're holding actual Bitcoin that you can count on. Otherwise, that good for the price isn't good for you long term because you may end up with a zero. So, but even when that happens, when some Wall Street firms get burned and their investors get burned, we don't go back to Bitcoin is bad. We go from Bitcoin is good to, oh, Bitcoin is good and I better control it the right way. So what you can do is get ahead of that learning by recognizing it now, that there are some ways to have better custody and promises, assurances about you have actual Bitcoin and you control it, versus learning the hard lesson with the herd that is currently being herded into Wall Street products.
So we're going to get what you're saying, what we're I think saying is we're going to get a New York Agreement 2.0 in 4 years with Coca-Cola, Google, and everybody saying, "Oh no, like this is not the good Bitcoin," and they're going to get wrecked.
I'll take a contrarian taker. I think ESG is on its way out. I think it's dying. I think the public's fed up. I'm not going to call peak clown world, but I do definitely think there is a shifting in sentiment of the broader public. I mean, you can see this in confidence polls, whether it be in presidents, in the federal government more broadly, the media. Like, faith in institutions is crumbling. BlackRock is an institution that people are beginning to be like, all right, what the hell are you doing? Why do you have 10% of all of these companies? Why are you pushing ESG down our throats, which is driving this world insane at a social level and really hindering the stability of our energy sector materially. And from when it comes to ESG and BlackRock, I do think the broader public is getting wiser to things that are going on with that particular initiative, and I do think it will be ephemeral. I think we'll look back in retrospect in 4 or 5 years and be like, ESG, that was pretty funny.
Did you hear Did you hear the latest? I saw a quote. It was very recent of Larry Fink said that he's ashamed of what ESG has become.
Yeah,
the politicized nature of it. He doesn't like what it is now, and he's not planning to focus on it. Or I forget what exact phrase.
Yeah, so people like on the social and like having like things forced down their throat from large investors, like that sentiment's definitely changing. And on the other side, it's just like empirically, objectively not profitable. Like, these ESG funds don't make any money. Like, you're not getting return for your investors. And at the end of the day, that's what these guys really care about, is like, how can they make money? You can only make money on fees via AUM and management fees for so long without providing actual returns for the end investor before it just doesn't work out. So I think dying in many ways.
We didn't have a fourth guest, or one rugged us. We should have just had Odell on. I feel like I need a counterpart to the statism on this show, because like Marty with like ESG
status.
Well, I mean, it kind of was like ESG's on its way out. Like, ESG was by definition ephemeral. Like, it had no definition. Like, it was just this thing. It just had this weird thing that it can be on its way out, and you can just usher in something else that you can use to craft a narrative of control. And then you mentioned like the centralization of assets are going away. It's like actually the opposite. Like, all the tokenization, the ETFs, everything is going back. Like, tokenization is in my opinion, like the best rugging, because you're putting an asset on the blockchain, and where does it sit, and how many layers of counterparty risk exist, and you're basically you're going into
for anybody listening out there, you can put a tomato on the blockchain, but if en route your tomato from wherever it was produced to your plate, if in the middle of that route I take that tomato and I eat it, you can have a claim to a token of a tomato on the blockchain all you want, but I ate the tomato. It's not yours.
You get no pizza. You get no pizza. You get nothing.
you get nothing. You can't tokenize physical assets. Like, it's not possible.
But what you can tokenize is information, and money is information, and that's really kind of the only thing of value that is information. It's a ledger. Money is a ledger of who owns how much of something, and you can exchange that. But and so that's the argument for why tokenization of real world assets is fundamentally limited, but money is really the only use case that it makes sense for.
the beauty of what we're going to get is we're going to get tokenized Bitcoin. That's what we're all talking about here. Like, we're going to get tokenized Bitcoin. They're going to say they figured it out. We tokenize Bitcoin, because that's effectively what an ETF is, right? It's just an ETF, and then they're going to trade it on it. It's going to be a token, and you're going to have a claim on it, and nobody's ever going to get the Bitcoin. Like, that's basically where this all goes. We said this like the second and third pod. It's like the trap has been set, and it's just, yeah.
You want direct UTXO exposure? Anybody listen out there?
And you sure as hell want the right and ability to take that, if you're not currently ready for it now, which is the whole point of on-ramp.
Yes. We got a lot of work to do, gentlemen. That's why we do this show. That's why we're very passionate about educating people the right way. And that's why on-ramp has really dedicated, ongoing sort of advisory services as you're learning about Bitcoin. It's why outside of this show, I produce a newsletter and 2 other shows to really try to get the message out there and educate people correctly. It's important. And if you're out there and you can see that we may have a better understanding of this stuff than the BlackRocks of the world, and you have people that are exploring this, like send them our way, send them the content, because again, if you do believe, as I do, that this is, I mean, may sound crazy, and probably why people think we're a cult, but I do think it's a moral imperative to make sure that Bitcoin succeeds in the digital age. And if you do too, I think it's very important that you point people in the right direction and get them access to the correct information.
Yeah, we will never tokenize your Bitcoin.
And I can't help but think about, like, this is why I've titled my writing series Once in a Species, because the scale of what's happening here is a once in a species event of going from analog value system to digital value system. That's a 0 to 1 moment that only happens once. And we just happen to be living through it. Now, that's an incredible opportunity. It also creates a massive risk, because if you fumble this transition, you set your dynasty back. You could be wealthy now, and if you screw this up, your future generations are not wealthy because you didn't manage this right. Maybe you trust the wrong Wall Street firm, you get your Bitcoin allocation, it goes to the moon, and then you get rugged and you find out you have 0. So you got to manage this well if this is as big of an event as we think it is. And the way to do that is by getting smart, by seeking out more information, educating yourself, talking to people who know about this stuff because they've been in it full time for, a half dozen years, like all of us have been, Marty more so, longer than that. And so, the scale of the decisions you make right now with regard to how you approach Bitcoin could be the defining factor in whether or not your grandchildren live well or not. And it all comes down to how much education you get about Bitcoin now in order to make the right decisions in this 0 to 1 once in a species event.
Yeah, it's the most imperative thing. I think that's exactly right. In what we're going through right now, actually, it aligns with everything else that's happening. Marty, our friend Tom, when I bring up, we're in a bull market for statism, and you have the prescient or non-prescient claim that we were in a clown world peak, I think 2 years ago, and it's just continued to get worse. And I think it will, when we think about like social networks, the news, money, like they're all in the most like highest point of centralization. And we're going to continue to go that way. And the same way we're going to continue to go into government overreach until there's this like pushback. And then we go the opposite way. And I think of like gold having free banking and the way that the notes were claimed. And then we went to the centralized point where we needed dollar claims and everything that's happening now. So I think like to this is just like a natural progression. BlackRock will own a bunch of Bitcoin, and then we're all going to like hit this confluence of all these central points where the market recognizes this is actually not the natural and organic way that we should, basically systems should be created and long-term sustainable, like the high volatility at the endpoints, where then it starts to go back out into the fringes. And one of the things is like we talk about the centralization of gold, but there's two products, one in Europe, Canada, and then one here in the US that basically lets you like have the claim on the gold, but then take possession of it. And I think we'll see more and more of that, where it's like you can have a claim on a unit, but then there's a check and balance of it, like knowing that you can take possession, because that's what allows for the free market to determine if this is like an unsavory or savory actor, instead of just waiting and pushing that volatility out until the very edges where there's trillions of dollars sitting somewhere and you can never touch them. And now you're holding a zero or a paper claim on green Bitcoin. So anyway, I think it's a long-winded way of just saying like, this is all part of it, but if you recognize what's happening, it's not just like crazy people telling you it. It's like, oh, this makes sense under the like rules of Bitcoin, also the rules of what's happening just on a like societal level, and you can get ahead of it. And getting ahead of it allows for your family to have like the wealth to live the life you want, but also pass it down.
Yeah, and I think the event going on here in Nashville this week is indicative of why you want to make sure that you're in exposure to Bitcoin the correct way. Like on ramp, maybe if you're not comfortable taking self-custody of your Bitcoin right now, but in the future you may be, and you may want to leverage some of the products and technologies that are being built out on second layers on Bitcoin. So right now in Nashville, we're at the Lightning Summit, and there's people from around the world that are building products on the Lightning Network to make Bitcoin more useful and more accessible for individuals. And you're probably going to want to use these products at some point in the future. And if you do, you're probably going to need like to self-custody Bitcoin to some extent. And like by siloing yourself to Bitcoin exposure via something like a BlackRock ETF, you are essentially preventing yourself from being able to do that in the future, to be able to utilize the technologies that are being built. The best case scenario, you're going to have to sell that ETF exposure, pay the taxes, and then buy back Bitcoin properly via another vendor. So yeah, when you're making this decision, yes, you may think Bitcoin is only digital gold right now. It's just going to sit there forever. And that may be the case. It may sit there for a while, but I'm pretty confident seeing everything that's being built. Like you're actually going to be using Bitcoin as a payments network, as a money, as a day-to-day currency at some point over the next decade. And when that point comes for you individually, when you're ready to shift from using Bitcoin purely as a savings account to an internet native currency that you're spending and using on a day-to-day basis, you're going to really want to make sure that you have the correct exposure.
Yeah, that's a good thread. Is like if you want Bitcoin, if you think it's going to appreciate in value, the extension of that is the things that you want, people will demand Bitcoin for them.
And you can't,
Jesse, I know you're going to jump in.
They're not going to take partial shares of the BlackRock ETF. Like you're not.
No, they won't. Jesse, I'll throw to you, but after that, Marty would love to hear kind of your big takeaways. Sad we weren't able to make it down to Nashville. Would love to hear kind of like some of the talks yesterday, or like what are the announcements that were notable?
Yeah, let's go to that.
That's been a great event. I mean, getting them in person at these events, whether it's the Nashville summits that they have here, the takeover events we have in Austin, many conferences around the world, it's great getting together with Bitcoiners who are actually heads down building. A lot of people believe that there's really nothing being built on Bitcoin, but once you come to these events, it's hard to actually go out and say that earnestly, because it's obvious that there's a ton of building going on. And so this summit, again, is particularly focused on the Lightning Network. So it's a bunch of developers building wallet software, building products that leverage Lightning. And I think for me, the big theme, I mean, I moderated the panel, so I'm a bit biased in terms of probably my favorite discussion, but I did a panel on Lightning and AI with Paul Toy from Stackwork, Obi from Fedi, and Jack Mallers from Strike yesterday. And I think, again, this is going back to the point I just made earlier, like you're going to need to actually use Bitcoin and spend Bitcoin. I think over the Lightning Network, particularly at some point in the future. And the convergence of Bitcoin and AI is happening in real time. And so that's actually one thing we really touched on the panel. Was last week, Lightning Labs announced that they had an L402 implementation in LangChain, which is a very popular AI developer kit and tool that is being used. And so we're basically at the beginning stages of the Lightning Network getting integrated with artificial intelligence companies. And I think this is going to be massive. Bitcoin, particularly over the Lightning Network, solves a massive problem, or many massive problems that AI companies have. Number one, like chargeback risk. Like right now, if you go to Midjourney, you go to ChatGPT, and you're paying a monthly fee for access to their models and to their AI agents, whatever it may be. And you pay a monthly fee. A lot of people are paying with credit cards, and a lot of people are charging back that. So there's massive chargeback risk that exists for these companies, and it's particularly a big risk for them because on the back end, due to the energy intensity of the GPUs, there's a lot of capital expense on that side of things. So they have to make sure they're as capital efficient as possible from a business perspective. And so like what Lightning Labs just released makes it extremely easy for these artificial intelligence companies to create paywalled gated API access using Bitcoin and the Lightning Network. So if an individual like myself, if I go to Midjourney, I want an image, instead of paying a monthly fee with a credit card, every time I want to produce an image using Midjourney's models, I get a Lightning invoice. Likely will automatically be paid. I'll probably set an allowance on Midjourney, like, hey, pay any invoice that gets sent to me up to this limit. And so like every time I ping their API to get an image, I'll pay them a little bit of Bitcoin. That's one way in which it'll be implemented in the AI world. The other way, which Stackwork, which we're invested in at 1031, they've been at this for years, but it also helps AI companies actually build these large language models because it enables companies like Stackwork to pay a global workforce to add data to their models, because they can pay people in Southeast Asia and Latin America and Africa very small amounts of money using the Lightning Network and Bitcoin globally. It's an international currency, like Larry Fink seems to grok right now, since it's very low fee, and since anybody can download a wallet on their cell phone, it's very easy to pay a global distributed workforce to help you build your large language model. And so, long-winded way of saying, yesterday, I think the Bitcoin in AI, the Lightning in AI panel is very high signal because it's very early on in this trend. And I think when we talk about like Bitcoin usage, the amount of usage that is just going to be used from machine to machine, like these AI agents just going out with Bitcoin allowances to complete tasks on the internet. Like you can make a very easy argument that actually in the future, the most transactions on the Lightning Network will be conducted by AI agents.
Yeah.
And so I think that's a trend that nobody seems to grok right now.
Absolutely. And I think that Tour de Meester just went on Preston's podcast and made the case that that right now is the 1995 moment for Bitcoin, meaning that 1995 was kind of the hockey stick moment for internet adoption. And if you zoom out just a little bit of the few things we've talked about here, AI using Bitcoin as its preferred currency because it's native to the internet. That's Jack Dorsey's whole argument. That's happening now. A couple other data points are big at this moment in time for Bitcoin adoption. Those being the rise of BRICS. The BRICS countries just announced that they're going to have a gold-backed currency, and that's going to compete with the US dollar. And that means the US dollar hegemony is eroding. Hard assets are back on the international monetary stage, that being gold, with gold being held by China, and you're trusting China and their reporting and honesty about what they're holding and your ability to get it back. And of course, that contrasts with Bitcoin, where you don't have to trust a nation state to hold your gold with Bitcoin. You can take self-custody and control it yourself. So that's happening. And then finally, Wall Street, BlackRock, the most important capital allocator in the world, has gone from creating a narrative in mainstream media, pushing a narrative in mainstream media that Bitcoin is bad for the world, bad for the environment, bad for, harboring and enabling criminals. And now suddenly in the last month, if you look through the headlines about Bitcoin in Forbes, it's all positive. All of it is positive now. It's all about how Bitcoin is good for the environment because it reduces emissions. What people like Marty have been saying for years, and the mainstream media has been actively gaslighting the world about to convince them otherwise. But now BlackRock is aligning itself with Bitcoin, and so now they're saying the same positive things, and that it's actually not a haven for criminals. And in fact, it empowers people in developing countries to have savings accounts who otherwise would be unbanked. Bitcoin is good for the world. So those three forces are happening right now, and they weren't happening last cycle. AI and Bitcoin, the changing monetary world order of the dollar's on the way out. Are you going to trust your money in a gold currency that's controlled by China, or are you going to trust a hard asset that lives on the internet and you can take self-custody of? And now Wall Street's an ally for Bitcoin. This could be our 1995 moment for the Internet of Value, in the same way that we all saw how that played out for the Internet of Information.
Michael, before you jump in, I do want to make one more point about the Bitcoin, the Lightning and AI convergence that Paul made on the panel last night that I really never thought of, is that you need privacy when calling on these large language models, especially if you're a corporation or a company. And if you have an account with Open or ChatGPT with OpenAI, and you put your credit card information there, and they know what you're searching. Like they can get some inside information of like how you're thinking about your business. And so these companies, from a B2B perspective, companies that want to leverage AI tools, they need a degree of privacy, and the Lightning Network provides that for them. If you can just pay an invoice over the Lightning Network without having to put in any personal identifying information, like that is actually a massive unlock for corporations being able to have some sense of privacy when leveraging these AI tools to make their businesses better.
Yeah, no, it's fascinating. We talk about it a lot, inside conversations about just how exciting like Bitcoin and AI and where that's going, where the world's going with like emerging technologies. Part of the goal for this show is we've started to do it, but it's like really bringing to light the overlap of Bitcoin with existing market structure technologies, and then also innovative net new technologies that, to Jesse's point, need a native currency. So I think that'll be a broader focus as we week over week find experts and be able to talk about like what does AI mean, or Bitcoin and AI, whether it's like music, whether it's data search, Marty's point, privacy, and like B2B. But I think there's going to be a lot of money to be made in these segments, and they're going to look very different, as we've talked about with the market structure of like Bitcoin and custody, and how like financial services will look, just because it's so different than the traditional world. I think a lot of these new companies, the way they're formed, will look very different. And so part of the goal for us is to like kind of bring them to surface and have discussions around it. Because the landscape over the next decade is very exciting. And there's a lot of opportunity outside of just like holding the spot underlying asset, but the infrastructure, or for like individuals with businesses that are trying to get ahead of curves of where the market's changing, things that are happening. Strike's working on it, and others when it comes to interchange and remittances and what does that look like using Lightning. But there's no shortage of different applications that'll be built out. And so if we can kind of, figure out a way in the format to really showcase that, I think there'll be a lot of like value for us to discuss, but then also from the external market to glean from it.
Yeah. It's happening. It's happening, gentlemen. And if anybody listening is just getting exposed to Bitcoin again, I do want to stress you may not want to use Bitcoin transactionally or like leverage it as a payments network quite yet. You may view it solely as a savings vehicle. And I actually think that's probably likely the smartest move at this point of Bitcoin's monetization phase is to view it as a savings vehicle and sit on it as it appreciates in value over time. However, the decisions you make today will determine whether or not you're able to leverage Bitcoin to its full extent in the future. So when you're trying to figure out how to get exposure, if you're not comfortable taking possession of Bitcoin now, buying on exchange, sending it to a wallet that you control, if you're not comfortable with that now, and you're basing your decisions off of that, make sure you make the right decision that allows you to have that option in the future when you are going to want to leverage the utility that's being provided at the different layers of the stack.
One thing is we were talking about, and I just mentioned innovative stuff, but also how things aren't innovative, because it feels like a wave, and whenever the cycle happens, is going to be crypto and AI, and you're going to have to rehash why you don't need a new token for AI for everything. And so I just think that's part of this as well, as explaining that so people can share with their network and they don't go down the trap.
I mean, I highly recommend Logan, if you want to pull up that tweet from Lalu again, like we'll link to this in the show notes. Go read the blog post from Lightning Labs. It's in the quote tweet that Lalu sent out. And I actually think Bitcoin's going to have an advantage this cycle, particularly around Lightning and AI, because of the dev tooling that's been built to date, and the fact, again, this is L402, so this is compatible with the HTTP stack. Like, it's HTTP 402 compatible, what Lightning Labs has built. And so I think from a dev tooling perspective, what Lightning Labs has built has a massive advantage over any upstart crypto token that wants to claim they can do AI better. Like, this is literally native to the HTTP protocol, what Lightning Labs has built. And it's going to be much easier to plug the Lightning Network in to these applications, opposed to like creating a token and trying to like smash it onto AI.
Yep.
Here's hoping. This is 1995.
Let's do it. Gentlemen, sorry I was late today. I must apologize. But it was a tight rip. It was a good one.
Yeah, it was fun. It was no problem at all. We'll give our absent guest a ribbing next time.
We will. And we will be back next week. Michael, anything to end it on?
I was just going to say Logan's our fourth guest.
Oh yeah, Logan, do you have any alpha to provide the listeners out there?
So much, but I'm going to keep it all a secret.
We'll get it out of Logan one day. All right. We'll see you guys next week.
Awesome. Thanks, guys.